TCS first up. Let me hand it across to Anisha. She's got the CEO, Krithivasan, and N. Ganapathy Subramaniam, the COO, with her. Anisha?
Well, yes, this is a special one indeed. This is the first conversation that K. Krithivasan is having as the CEO and MD of TCS. Krithi, hi. Thank you so much for this opportunity and welcome to ET Now.
Thank you. Good morning. Thanks for having us.
And steadying the ship as always with him is NGS, the wise NGS. Thank you so much for making time, NGS.
Thank you. Great to be here.
First up, before we get to business, Krithi, how does it feel the hot seat? It's been what, a little over a month that you have taken over at the helm, and it couldn't have come at a more precarious time.
I won't call it precarious. First of all, there is never going to be a good time or bad time for these things. You take it as it comes. Two, to me, like I've been here for so long. I'm continuing to be among friends more than co-employees. So like in a way, it feels comfortable, right? Like there's no major change. Like continue to be among friends.
Okay, continue to be among friends, but let's talk business now.
Sure.
I want to understand from you incrementally how the demand environment is changing. From Q4 to Q1, is it getting incrementally better or is it getting incrementally worse?
Neither. I would say like it's remaining stable as this was in Q4. Like Q4 also we called out there is some certain uncertainty because of macro change situation. It continues to be around that, and but overall you saw that our TCV continues to be very strong. Our order book is very strong. So our long-term prognosis is good. Short-term we need to see like clients manage their budget based on the uncertainty, and we will work on that.
Sure, so it's largely status quo is what you are saying, but let me reframe that question when I pose it to NGS. Is it at least fair to say that the worst is over, and as we head deeper into FY24, there'll be a swift and gradual recovery? And I ask you that because a lot of the negatives in terms of the contagion of war or the fallout of the banking system, all of that has played out already.
I think we are pretty happy with the set of numbers that we have delivered for this quarter. Amidst the recessionary trends and the macro situations that we faced. I think 7% CC growth year on year, $10.2 billion of order book, completed the performance appraisal of all our employees, gave them the increment that is required of them for the first year. I think the quarter has been a phenomenal quarter from what we have accomplished. As Krithi pointed out, there are always demand variations. What we see is a lot of opportunities in vendor consolidation, cost and optimization as they focus on efficiencies. At the same time, the large deals that we have lined up augurs good for the coming quarters. We need to see where the opportunities are and execute them well, and and deserve what we deliver in quarter 2, quarter 3, and with a lot of attention and diligence to deserve our clients' confidence.
So if you do execute them well and do what is deserved to get your client attention, will you be able to at least see quite a bit of recovery in the second half? You did candidly acknowledge yesterday that double digit is a tall ask for this year, but if not double digit, at least high single digit, 8 to 10 versus, let's say, 5 to 7?
I should say so. I think that's the job cut out for us, and we are geared ourselves for it.
So I'm taking you on that, 8 to 10 or higher end of the single digit is what you are at least targeting, let me put it that way. But let's talk about various verticals. Sure. And Krithi, I want to specifically talk about geographies now, UK and US. Right. UK is something which is standing out quite tall for you. The last few quarters have been quite strong, while on the other hand, US and North America has been slowing down. So two-part question, is that resilience in UK likely to continue? And secondly, with respect to the US and North America, is it looking at least incrementally better in the sense that clients are coming back to the table, the deal conversions is happening at a faster rate than what you saw 3 months ago?
See, UK, like again, if you look at the kind of order book that we have closed in the last few quarters, and also the conversion, like we are very confident going forward on UK. And we also UK, if you look at, we are booking orders across all verticals. While the platforms have been strong, but we've been booking orders across all verticals. It's quite strong, and we're quite happy with where we are in UK. Even in US, it's not that clients are not coming to the table. Clients are coming to the table. We are discussing a lot of interesting programs with them. But what's happening, as we explained yesterday also, some of those programs where they don't see the ROI immediately or where they don't deem them business critical immediately, those programs are getting paused. So it's not that discussions are not happening or people are not talking to us. There's a lot of discussion happening. We are quite happy with the way we are engaging with our clients in US also. But as we said, because of the uncertainty, maybe a few quarters there could be some softness, but it should pick up soon.
Yeah, no, I just had a follow-up there. When you say that the projects which have lower ROIs are getting pushed a bit, and this is something we have been hearing with respect to the global commentary as well, that discretionary spend and discretionary projects is something which is getting a bit curtailed. My question to you is the pie of discretionary itself increasing, in the sense that a transformation project which was considered critical earlier, is it now getting pushed in the discretionary basket, and hence there's a bigger pie which might see a slowdown?
See, like all transformation projects are in a way discretionary. So to say that a transformation project is not discretionary or the other way, I don't think that's the right way to classify.
Okay.
We would classify non-discretionary projects as something which is regulatory or which is support, those kind of activities which cannot be deferred. Anything discretionary was where the customer has the option to either do it today, this quarter or next quarter or maybe later. But at the same time, if you look at a cloud migration,
Sure.
a cloud migration project may be discretionary from this quarter or next quarter perspective, but they have to do it sometime, right? So some of them are not, they have to get through that, but they have the discretion of doing it this quarter or next quarter.
Okay, so that's what's happening, a bit of a bit of a ramp down is what we are seeing. NJS, I wanted to talk to you about various verticals as well in terms of BFSI. That forms almost 35-40% of your business, and that's been slowing down. In fact, this quarter there's a sequential decline on a quarter-on-quarter basis. Is this weakness also likely to persist for BFSI? Because on one hand, the deal pipeline is looking all right, but it's not getting converted somehow.
I don't think so. I think, this is a situation where, we look at out of the $10 billion, we've done $5 billion from North America.
Sure.
And $3.2 billion in BFSI alone. Okay. So the demand environment as such is looking good. I'm not seeing any problems with that. The kind of deals that we are signing up, they're all, long-term committed deals, right? But how we execute them, how do we ramp up, and what is the pace at which we want to ramp up is something that we are working with customers, right? Clients really look at some of those 3 or 4 situations today, right? Now, the generative AI hype which is happening is the architecture in which we have agreed to execute. Is it fit for purpose? Will it accommodate the generative AI kind of technologies as we progress so that the architecture is really future-proof, right? So that will mean that, look, next about 2-3 months we will iron that out before we actually ramp up and then execute the large transformation programs. That's the first one. The second one is that how do we manage the consumption costs? Really, if you really look at cloud, there's no going back on cloud. A lot of lifting has been done, a lot of work is going on, but at the same time, the volumes have been quite high. At the same time, the consumption costs is probably, what they thought that they will consume in year 5, probably they are doing it in year 2 or year 3 itself,
right.
Which means that, look, am I going to pay more? And how the ROI pans out, and how do we adjust some of this?
Sure.
These are things that we need to work with the customers, especially because they are discretionary in nature, and then still pan out the return on investments that Krithi talked about. But overall, I think BFSI is nothing wrong that we see.
Okay.
And the crisis that we saw, whether it is SVB or the Credit Suisse, I think they're all behind us.
Okay, so they're all behind us. You talked about the deal wins of around $10 billion. So is it fair to assume that from 7 to 9, at least we are now targeting $8 to $10 billion per quarter? Some improvement, some progress?
No, I think you corrected me yesterday to be 7 and 9, so I'll stick to it. We're happy with that. I think we should see. I think, the pipeline looks good. I think there are significant opportunities that we are working on. And it's very, very broad-based. Some are large deals, some are smaller deals. So we are happy with the pipeline. We are happy with the deal conversions. Albeit the fact that, look, Europe is a bit slow. Decision-making is a little off the than what normally is. So we would like that Europe fires up. Then, I can really up it to 8 to 10.
Okay, here's fingers crossed for Europe. That happens soon. But Krithi, the point that NJS was making with respect to generative AI, right? That's coming a lot in the conversations, perhaps the top topic, I'm sure. Talk to me about how this entire potential and opportunity will unravel. Will it be those large $1-2 billion deals that will come to the picture, or will it be a plug-in that each of the clients will expect in the orders which are already there? And what's the timeline of this coming to fruition?
My guess, right?
Yeah.
To start with, you would see many of these smaller projects as people understand the value, and once it becomes an enterprise-wide initiative, then you will see larger projects. I don't know whether it will ever be a $2 billion project or a $1 billion project, but as people understand, as they enter out at the enterprise-wide, you would see larger projects. To start with, most of the enterprises are likely to do some smaller POCs, understand it one division, or try to see for one function. There will be smaller projects to start with, but once there is a better understanding and appreciation of how we can leverage this technology and how they deploy it at the enterprise-wide level, you would see more larger engagements.
Okay, larger engagements. And just wanted to get a sense from you, Krithi, the initial hump of the transition is over, the initial 1 month and the client conversations, etc. What's the priority right now? What are those 2 or 3 things that you have top of the agenda? Is it just getting a lot of deals? Is it you telling Samir that control the cost, let me get back to the margin band of 26 to 28%? What's the top agenda?
Has it ever been only one of them? Like, we try to do all. Like,
okay, top 3. I give you top 3 then.
See, like, then if you say top 3, we don't look in terms of financial performance,
sure.
right? As I was explaining even yesterday, our priorities have always been how close we get to our clients, understand their priorities, and then how do we align the organization to our customers' priorities. So to that extent, understand customers' priorities, develop internal capabilities, go for massive training internally. Those would be the priorities I would be working on. And the P&L should be the result of this, and not you target only P&L. We would target try to get close to our customers, understand their priorities, and work with our associates. That would be the priority, not the other way around.
Okay, fair enough. But NJ is the long-term target of $50 billion by 2030, trying to prepone that, or is it on track? And a word on that?
I think as I said, that look, there are all aspirations that we will set, and it will rally the organization behind it.
But you have to marry the reality with aspirations, right?
Absolutely. I think the aspirations are important, and the milestones, intermediate milestones that we will have, will accomplish some of this. I mean, I don't want to say that we will achieve by 2030 or 2028, and there are many things that we will have to do to get there.
You would have loved to get it done within your tenure itself, right?
Yesterday, yeah, absolutely.
We may still do it next year.
That will be great, right? He's counting his first quarterly earnings. You're counting down last 4, last 5?
No, I don't even look at it that way, but I think, we had a fantastic innings at TCS, and I still have 4 quarters to go, and work with Krithi and see what difference that I can make further in these 4 quarters, and then take it one day at a time.
I'm sure there's a large impact there. So let me quickly just wrap it up by asking you, Krithi, define for me in a word or an adjective, what do you think about the short term, medium term and long term? Short term being 3 to 6 months, medium term 6 to 18, and long term 18 and above. What adjective will you use for all 3?
Short term, I would say, is cautionary. Both medium and long term, I would say, quite optimistic.
Okay, on that optimistic note, I'll let you go, gentlemen. Thank you so much for making time and speaking with ET Now.
Thank you.
Thank you.